Good morning, everybody. Oh man, like everything is just like screwed up. Okay, we're good. How are you, Lucas? He says hello. Because you know what? I'm having a slow morning today. Okay, that's what's going on here. But hey, let's go to the charts. Check out what is going on here. Okay, so S&P 500 had a pretty insane rally Thursday and Friday. Metrics from options and volume indicate to me that this was largely short covering. Over the weekend, we gapped down quite a bit lower. This is something that I think maybe would have happened naturally to some extent, but I also think that we're getting. Oh, hold on here. I need to turn the volume down just a little bit. Um, but I also think that this was in large part because they cut Russia off from SWIFT completely. So now the most aggressive um man, I'm having a hard time collecting my thoughts. The most aggressive sanctions have been placed on Russia, and that is in part responsible for the movement lower. I think that we should be quite careful about making any huge conclusions about today yet, because this we're in a situation where we are likely to continue having uh, volatility. I think this maybe the Thursday Friday might have given you the impression that like it's over. This is where we buy the dip and it just continues going up forever. And I do not believe that is the case. It may well be that we have seen the lows, but we are probably due for quite a bit more volatility still. Okay. Coming over into the treasuries, you can see treasuries jumping back up above their highs. Here again, I think because of Swift and oil. Well, oil opened up quite a bit higher, $96. Um, Although I think our oil is going to be the one that we need to watch. Um, Oil is probably going to be our best barometer of like how the war is going, right? Here we got natural gas, gold, and silver. Still off of their best levels, but they're showing some promise here today. And then we got copper kind of at the upper end of its range. Bitcoin did take a little bit of a jump when people were suggesting that people might use Bitcoin to get around Russian sanctions, but I don't think that that's a very good reason to buy it here, as it has come back a little bit. And here is the dollar 90 sitting at 97 right now. Quite can't quite understand why we are up after weekend events, why we are up in the treasuries. Well, so I think that we need to talk about this Swift thing for a second. And of course, I don't know everything about it. And so I think that when you get into the Swift system and the possible consequences that it can have, um, are very wide reaching and kind of reach out through all parts of the financial system. And it does not kicking Russia off of Swift um, does come with some risks for the West. And so I think that that is in part what the market is trying to price in here at the moment. Um, like this war is going to have a global impact. Um, it's going to have an impact on global GDP, almost certainly. Now, the good news is that they have started some negotiations. Must say, so far from all of the intelligence that we've received, and I mean, of course, Ukraine is saying that they won, but we're getting a lot of detailed intelligence from the West backing this up that the Russian invasion has not gone very well for the Russians. They are not matching the timetable that they expected. Doesn't necessarily mean that they're going to that it changes the end result. The end result is probably still, unless they negotiate a quick end, the end result is probably still that Russia just takes over all of Ukraine. It's going to be a lot harder and more bloody than the Russians wanted it to be. And I think that that increases the possibility of a quicker end. So that could be positive. Why are we up? Well, so when we say why are we up, why are we up in treasuries? Because clearly, I mean, it was the weekend gap was treasuries up, S&P 500 down, right? And I think that so let me kind of reiterate more specifically. I think that the S&P 500 gapped down over the weekend, both because one, the rally that we saw Thursday, Friday was largely short covering. And I think that there's still a good amount of selling pressure in the market. And two, because of Russia being kicked off of Swift. Yeah. When are the micros supposed to be rolled? That's a good question. I believe they don't do it until the second. Oh, no, oh, are you talking about the micro treasuries? The micro treasuries roll on the last day of the month. So this is the last day you can trade these. Yeah, I remember you. You know what? We get a lot of different Indian names in here these days, so I might like mix people up, but the name is definitely familiar. Yeah, this is the last day you can trade the micros. Oh, you're talking about the day. Like, why are we up since then? Hmm, who knows? What we've seen since then. I mean, it's really hard. It is 100. It is like 100 point range, isn't it? But like the liquidity is such. I can't. What the heck was that? I can't really make too many conclusions from that. For all we know, that could just be the randomness of the market. Okay, so oh, something's going on here. Oh, okay. We did have some news that I forgot about, but no, it seems like something's going on. Okay, so goods trades balance was negative 107.6 versus an expected 99.6. And that is probably why we are seeing some movement here in the dollar for the past 10 minutes. At 7:45 we got Chicago PMI, which is a big one. Oh, you made the thumbnails. Yeah. So I would wonder um I so I don't have a thumbnail right now. I actually would be interested in having you do another one, but I not at the moment. But I had a thumbnail that last week that didn't perform very well and I redid it. I redid it. Let me show you. You guys tell me what you think here. So I changed the thumbnail to this. Price equals BS and it's got a BS o meter in the thumbnail. Oh, we also had nuclear. That's a good point. I kind of forgot about that. Although I don't know if anybody really. Uh, that's probably me projecting. Me personally, I don't read too much into that. I don't think that it's that serious. But let's see. I really think that a lot of what's going on here is Putin saber rattling to try and weaken NATO resolve. But I think that NATO's position is we're not going to attack anybody. We're a purely defensive alliance, but we are going to inflict maximum economic sanctions. And If economic sanctions lead to Putin attacking or shooting nukes, then like so be it. Like that's what's going to happen. But I think that the calculation is that he wouldn't go that far. That he's mostly bluster. Nuclear holocaust ball running. Yeah, I do have to say at this point. Well, okay, man. Okay, hold on a second. I put on like sweatpants today, and I'm like already hot. So I'm gonna go and switch to my shorts, and then I'll be right back. I don't know why I'm having like a hard time forming thoughts today, but I guess I didn't sleep very well because we have the puppy, and yeah. But I'll be right back. Okay, we're back. Look, you see him? Say hello. Hello. Oh, he's such a scaredy cat. Always shakes when you first start holding him. There we go. I wouldn't discount him. His days are numbered, and these sanctions are going to crush Russia. He is scared. So anytime that you start holding him, for the first little bit, he shakes, but he'll get used to it. We're going to have to do a lot of socializing. Yes. Oh, and your breath smells very much like puppy breath. Yes. Say hello. Looks like he is long and waiting for the open. If I was long, yes, I would certainly be. I mean, I can 100% feel just even thinking about going long just brings out the emotion of being right. Like there's like a lot of potential to make money here going long ES, but it's a big unknown. What you doing? So I don't think that Putin is crazy enough to dead hand the entire planet, but like who's who knows? Well, if I was going short ES right now, um, because the short term action is a little bit in line with you, I would feel a little bit more comfortable. Anytime that you have a little bit of profit built in, you feel more comfortable, right? You see it right here. You see it right there. He's just so absolutely tiny that he can just sit on my desk. Wait, what just got canceled? I just heard something come through on the news squawk, but I didn't hear the first part of it. Pork chop. Well, so you want to hear the story? Okay, so first of all, the name that the family selected was Goku. I know, right? Uzi was like, "Don't pick a pop culture name, whatever," but no, they chose Goku was what won the vote. we put all of the names up and we let everybody vote for like 2. I should have said vote for 3, but they picked Goku. It was like Apollo and Goku were like the top names, which it's kind of funny. It's like exactly how democracy always works, right? Is like that's what everybody voted for, but then everybody seems kind of disappointed in the end. Uh our one daughter was really mad about it and had a temper tantrum about it for like 2 hours, but Goku was what they chose. But my wife told me that her dad um never called their pets what they were supposed to. Like she would pick a name and he would always call it what he wanted to. So we can call him Nostradamus. I wanted to call him Cash or Nostradamus. You know, in videos we can say his name is Cash or Nostradamus. We can train him to respond to both. You see, when then we get the best of both worlds. He is so cute. You're gonna go to the dog park one day and call his name, and 9 other Redditors' dogs are gonna come running to you. I'm a little scared to take him to the dog park. I mean, look at how tiny he is. Look at how small this thing is. And like, here's the thing: he doesn't get much bigger. He maybe gets, you know, like 60-70% bigger. I just call my dog Mr. Dog. You say that I think Cash was good too. But I like the idea of Nostradamus because I think it's funny when people make these videos where their animals predict markets. I think that's just hilarious and I want to do that. So you got the dog version of a cat and named it. That is, well, no, I don't think that's how I would describe these dogs. They I tell you what, Papillons are interesting dogs. They are tiny for sure. They're as small as they get. I think that there are some Chihuahuas that are smaller, but Papillons are basically like the smallest kind of dog that you can get. They are actually a type of Cocker Spaniel. So they're a type of Cocker Spaniel. So they are they very much love people. They love people so much. He just, man, you look at his face. When he looks at you, it's like he's staring into your soul and he just like has this look of like pure admiration on his face or something. It's like pure admiration on his face. You can just tell he's looking at you that he loves his new family so much. It's really weird. I did not think it would be like that. They really like people, but they're also very mischievous and I would say spunky. Like one of the problems that they have is that they are extremely confident, and so like it's really common to take them to the dog park and come across another dog that is not as friendly and have a fight. And have a fight. Well, we've had dogs. Well, okay. No, not like this. So my parents would not let us have any pets. You not right. The whole piercing eyes thing always got me. Yeah. Okay. So my parents wouldn't let me have a pet. When I got married the first time, we got the bird, right? Say hello. Then when I got remarried the second time, my wife had 2 dogs, Mickey and Sadie. They were they're Yorkies. And they never looked at me like that though, but they were both fairly old. And in fact, when we bought him, We were buying him because we knew that they were getting older. But we did not think that they were both going to die before we got him. But they both ended up dying. They both ended up dying. So we just got him, but they never did that. They never would just sit and stare into my eyes. Breaks your soul. It is really is quite adorable. I think that you are not ready to just sit and behold it. Looks to me like you want to play around. So I'm going to put you back in your little cage that I've got here. Okay, bud? He's probably going to start barking at me, but he has a little bit of a cold. I think. I think he just sneezed on here. Yeah, there you are. No, you're good. You're good. You just stay right there. I can't do it, guys. I can't do it. Oh, okay. I'm just gonna hold him down here where you might not be able to see him. Okay, what were we talking about before we got the dog? Oh, we were talking about how crazy is Putin. Okay, so here's the thing. Um, I really don't think that Putin is going to like blow up the world. And I don't think that Putin did this thinking that that it would lead to a nuclear war. I really don't. I do think that he is being ideologically motivated, that in this in the same way that Hitler was when he started World War II. He's invading countries because they are a part of their history or whatever the deal is, right? Which is a really so whenever you get somebody making ideological decisions, okay, the first thing that you got to be thinking is they might not make very good decisions, right? Because you are essentially when you start making a decision for such ideological reasons, is essentially what you are, or you've taken on the persona of, should I say persona of an ideological person. Essentially what you are saying to yourself is, I am willing to make some decisions that are somewhat illogical because of my ideology, right? This is the mistake that these right wing guys tend to make. Um, you can see it in U.S. politics all the time. You will get these right wing crazies that do or say things that don't really make political sense, and they're doing that because they think that that's the right thing or whatever the deal is, right? So you kind of always got to think about that. And so here in this case, I think that Putin bought his own bullshit for sure. He thought that when they attacked Ukraine, that they would be able to push through very, very quickly. He thought that the Ukrainians wouldn't put up very much resistance. He thought that he would be greeted as liberators, that people would welcome the Russian troops in that area. He did not think that the government there had the popular level of support that they do. In part because he's been pushing the propaganda that it's an illegitimate government that doesn't really have the support of its people. But the reality is that it does in the western part of Ukraine, and it's really just those small regions, and not even those entire regions that have been claimed to break off. They don't even control all of the cities in those areas that the separatists don't. So he really he really miscalculated, right? So now that he's miscalculated, where do we go from here? Well, I do think that escalation is possible, but I don't think that even he is Putin is dumb enough to come in and start a nuclear war, right? So, one of the things that we saw over the weekend was these missiles that are thermobaric, I think is the term, right? Thermobaric. Uh, yeah, you see the puppy? Isn't he cute? Dude, I was so excited. I've never been more excited in my life to get him, and it's totally worth it. He is the most adorable thing I have ever seen in my life, and it's just been like an overload of adorableness for the last 2 days. He's so great. And he is super chill. He's super chill. When he plays, he plays. He is a cutie. He is perfect for me at least, and I think the rest of the family likes him too. Oreo doggy. He really is like an Oreo, isn't he? He has a little spot on his back here. I don't know if you can see it very well. It kind of looks like a heart. That's not that side, it's the other side. Anyways, there was some launch pads with thermobaric weapons on them. Now, a thermobaric weapon is like oh, what is the US one called? Do you guys remember that day when Donald Trump launched the thermobaric weapon on ISIS? So it's like it's like an explosion that's super hot and sucks all of the air out of your lungs. So like it kills everybody within an extremely wide radius. Um, it's not a nuclear weapon, but if it was launched on a city, civilian casualties would be unreal, right? And as soon as they saw that, they're saying, are they going to use thermobaric weapons on Ukrainian citizens? Because if they did, it wouldn't be launching a nuclear weapon, but it would be basically the same thing. Like the loss of human life would be enough that I think you would see world leaders think about intervening. What are you doing? So like that possibility is there, but here again, I'm not so sure that he actually wants to do that. That he's actually going to launch that. I think that it's more posturing, and that here again, the everything that I see is kind of points towards somebody that is trying to freak everybody out as much as possible so that they give up quickly. And what happened instead was the Ukrainians the Ukrainians dug in and said, you can't scare us. You can't scare us. He is hungry. He might be. I need to go find his food bowl because he could wake up. It's early in the morning. Maybe we should go do that. Now, I am not necessarily hearing any new headlines. The treasuries sure did move up here, didn't they? The treasuries sure did move up. The S&P 500 is moving down. I wouldn't say that it's so dramatic, but they are moving down. Yeah, they can kill a lot of people by slowly invading with conventional fire, but not too many at once. Yeah, I mean, the thing is okay, so now that the first wave of the invasion has gone so poorly for them, where do they go from here? I do think that you could see some degree of escalation. I don't think, man, I mean, if they start moving into Kiev, that's going to be like block by block bloodshed, right? It'll be pretty crazy. Um, I think that they want to see finding out. I mean, they're doing negotiations right now. I think you could see. I wouldn't put it past that. I wouldn't put it outside the range of possibilities that we see a ceasefire today of some sort. Like even if they don't um come to a resolution, they might just call for it like a temporary ceasefire or something like that, you know? But I do think that Putin wants an out. And the thing is to get an out, you're going to want to you need to push things as far as in your favor as you can. So you might see some short-term escalation in the next few days. But I would hope that it is not to the point of using thermobaric weapons. The resistance is just because of the media propagandizing the story. Yes and no. So here's the thing that's interesting about this Nasdaq killer. I think it's way more fascinating than that. Oh, I want to talk about this so bad. This we are seeing something truly unique and interesting in history. It is really like you see what's happening here with the Ukraine conflict. You really have to wonder about what the future of warfare is now, because the way that this has gone, it seems to me. Well, okay, so let me back up. So why do I say yes and no? There is definitely a lot of propaganda, for sure, on both sides. Both sides, you're going to see propaganda, of course. And I've seen some stories from the Ukrainians that kind of ended up being like exaggerated or not true, for sure. Um, and of course, everything that you see is going to be, you know, try to be in favor of whoever it is, and because we live in the West, it's going to be everything that you see is going to be NATO propaganda, NATO and Ukrainian propaganda, and you're not going to hear the Russian side of the story. And if you go into Russia, all you're going to hear is Russian propaganda. But what I think is different and unique in this situation is that the propaganda is not just coming from the military. You are seeing propaganda, basically in the age of sorry, war in the information era. In war in the information era, everybody has a part to play. And what you are seeing is that people online are finding the stories and the videos and themselves. The military doesn't have to do anything. People are just finding this on their own and getting involved. And I have to say, watching the memes and stuff, it's fun. I mean, it's it's kind of messed up because it's war, but I mean, I love memes, I guess, you know, and I love internet and I love internet culture. The internet culture has gotten involved in this war in an intimate way, and it is very decidedly against the Russians, right? In so much that you're seeing a wide uh, array of people in Russia standing up against it, even though they know that the government is you know, going to push against them, right? So it's interesting. So yeah, there is a lot of resistance because of propagandizing the story, but it wasn't it wasn't necessarily a media fabrication. The people did it themselves. The people were inspired by the leader and decided to stand by him. It's really a remarkable thing. And again, yeah, I think that it kind of says you really gotta wonder. Um, kind of doesn't make sense to do any kind of conventional warfare now in the informational age because um, there are severe costs. The internet will make the aggressor pay, and the kind of land grab like we saw during World War II and that Putin is trying to do today kind of seems to me like this is the last death knell of it. This is kind of like everybody's going to go, nah, you don't want to do that. It's a dumb idea. It doesn't work very well anymore because everybody knows what's going on. Okay, I just heard my wife come home. I'm going to try and give him to her because he is a little distracting. Because Lucas laughing at the internet will make the aggressor pay. Well, okay, so think of it this way. Think about the Iraq War. What in what way did you see the internet propaganda support the Iraq War? I don't. That's not what I remember. I remember the internet made websites like MoveOn.org possible, and they very much pushed back against the war in Afghanistan and Iraq. And it seems to me that opposition to the war in Afghanistan and Iraq was higher than it would have otherwise been without the internet. Am I wrong? I mean, that's just my opinion. Do you disagree? I just there's so much information out there, and the big thing that you come off of all of this is that nobody in the world wants to see a war. That there are of course warmongers that can really push things, but um they're not really able to do it in the past with the internet around, you know? And yeah, I say the internet will make the aggressor pay. I'm just saying, like, it seems to me that people that initiate military action can't win the propaganda war after that, you know? And it does have a very meaningful cost because I could see if an event like this had happened in the 80s before the internet, maybe Ukraine would have rolled over, right? Like the ability for the Ukrainian president to come in and tell everybody, "Hey, here's what's going on." Like at any moment cuz he can just like tweet or make a video and post it anytime. Anytime, and everybody in that country can have access to it. They don't have to be sitting in front of the TV watching the TV at that time or anything like that. That is just it's on their phones or they can connect to Starlink satellites. It's like, man, that ability to just talk to people, it ends up being it changes the whole thing. And the propaganda war part of it, the the motivating people part of it, it's a completely different game. And a dictator like Putin is at a severe disadvantage in that game. He's at a very severe disadvantage in that game. And it's kind of interesting, you know. And to the point, like, that you've seen a lot of Russian soldiers like give up very easily. They're all conscripted. They don't know where they're going. It's really weird. It's like, what did they think was going to happen? They send these kids over here. A lot of them weren't even told that they were actually going in. Like they thought that it was just like a training exercise, and then all of a sudden they're going in. What? Did you hear, Mom? Should we talk about or is that happening? I'm sorry, I didn't realize. No, we just did that. It can't be time for that anymore. Oh, Chairman Powell testifies on Thursday, Wednesday, and Thursday. Well, that will be very interesting. It does kind of feel like we just heard him talk to Congress, huh? But that was because they were doing confirmations and stuff. Well, um, I think in this particular instance, I think that I'm going to be more interested than normal to hear what he has to say, simply because we haven't heard from Fed speakers a whole lot lately. Can you come get him? He wants to play. He's not. He's not into just chilling. Oh, what is that? Is that from his nose? think it is. I think he's got a runny nose. Okay, let me pull my headphones on. Let's see if I can kind of gain. I'm. It's getting easier for me to talk. Good morning, Sergio. So we have heard a little bit from the Fed in the past week. Um, I kind of feels like they've been a little bit non-committal about things lately, don't you think? Like, I think one of the things that you see is in these periods where they're keeping interest rates low and they're trying to subdue volatility, then the goal of the Federal Reserve should be to be as open as possible and to, notify, and that they want everybody to know what's going to happen before it happens, right? But right now we're in the opposite time period, and in this case, I think that it kind of turns into the Federal Reserve wants to maintain the ability to surprise people if they need to, because when you're trying to bring down inflation, I think that that's kind of what you've got to do. Is like if people's inflation expectations become entrenched, the Federal Reserve has to come in with shock and awe in order to change those expectations, right? I'm just curious if they will back down on taper and rate hikes. Well, they can't back down on the taper, right? Because the taper is basically done. So they can't back down on the taper. Um, will they back down on rate hikes? I think it's extremely doubtful that they will not raise in March. I think that you're going to get at least two rate hikes here. I think that we'll get at least two rate hikes. At that point, though, come the summer, then you've got the possibility of like a recession appearing in some of the data. They could back off, yeah. But I think there's almost no way that they don't raise at least a quarter of a basis point in March. I do think at this point that I think they were kind of leaning against it anyways, but now with the Russian and Ukraine thing, yeah, they're not going to do the 50 basis point hike. I don't think so. I think that's extremely unlikely. I think that what was going on before was that the Federal Reserve really didn't want to do the 50 basis point hike, but the market was starting to pressure them into doing it. And the Ukraine situation basically turned all of that pressure off. So now the Federal Reserve is going to do what they wanted, which is only a 25 basis point hike. That's what I think is going to happen. Imagine if Russia comes out that Bitcoin was a creation of the KGB and they are adopting it to circumvent sanctions. I don't think that's going to happen. You know what? I think it's more than that. So markets took off on Friday. The cryptocurrency market took off on Friday because people were getting excited about that Russia could try to use Bitcoin to circumvent sanctions. Um, so first of all, I don't think that they will. I think it's highly unlikely that the Russian government would use Bitcoin directly to, and publicly to circumvent sanctions. And do you know why? Because if they adopt it themselves, then what is stopping their populace from adopting Bitcoin to circumvent their own restrictions on economic activity within their country, right? And for a country like Russia, with the way that Putin is running things there right now, because I mean, for a while they had freedoms, but he's cracking down harder and harder every day. And they don't really have a whole lot of economic freedom. It's really, really is there in Russia. Like The oligarchs get all of the money and the regular person is just screwed, you know? Uh, so adopting Bitcoin would be a really big hit to his personal power. And that's why I think it's extremely unlikely that Russia would outright do that. Now, would individual oligarchs try and use Bitcoin to circumvent sanctions and so forth? Yeah, it's probably quite likely that you will see some amount of money go through. Is it a enough to warrant a significant change in Bitcoin's price? I'm not so sure because the issue is that those oligarchs have to know that they're being watched now, right? You transfer it with Bitcoin, and then where do you go from there? Where do you go from there, right? You're not gonna nobody's gonna let some Russian billionaire buy a yacht with Bitcoin, right? It would be like there's sanctions. I mean, there's sanctions on them, and people are going to be on the lookout for them trying to circumvent sanctions. So Bitcoin in this situation now, you can really only do transactions through you can really only do it black market. It has to be black market. So first of all, if you're going to do something black market, are you going to use Bitcoin? Probably not, especially if it's a really large amount. You're going to want to use a more secure coin, one that protects your anonymity better. So I don't think that you would do it in Bitcoin, but two, it's like you're still going to have a hard time transacting anywhere in the West for any kind of meaningful transaction, right? It goes back to the same problem that you saw in Canada, where it's like, yeah, you can donate money to the protesters, but number one, you still have to convert it to Canadian dollars to do anything with it. Um, and even if you decide to go through Bitcoin, even if you decide to do like direct a direct transaction with somebody else for Bitcoin for a good, um, the government can come in and try and freeze your wallet and stuff. Do these orders that say like they told the protesters, okay, like we know you have this money in the wallet, but you can't spend it under threat of law. Like, and I think it's the same thing. So the bull case for cryptocurrency off of the Ukraine invasion does not make very much sense in my view. And in fact, I think that I would still be really concerned about Bitcoin because the bearish threats to Bitcoin are still out there and don't change from this, right? The volatility is really bad for these risk assets and has really hurt Bitcoin. And we're still seeing central banks be quite aggressive. And in fact, the way that this has increased oil, that's going to be input costs into everything. So this conflict creates inflation. So you're likely to still see central banks be aggressive about addressing monetary policy. So I am saying I think there's almost no chance that they don't raise rates in March, right? But that's not good for Bitcoin historically when rates rise. So I personally don't see the case here. I would sell a yacht for Bitcoin. Would you sell a $10 million yacht for Bitcoin? I'm just saying I don't think that you can buy a $10 million yacht with Bitcoin and people not notice, you know? Oh, okay, so I missed the question here, Miguel. Do you know why Putin alerted his commanders to alert the nuclear forces just because his Visa Gold card was rejected on his internet purchase on Amazon? It's not hilarious. No, it's not. When you look at the commanders' faces in that thing, they don't look so happy. But I'm not sure that that's serious. That particular piece of information, I've just kind of been discounting. I don't think that we can really know what it means. And even if we did know what it means, like could we trade off of it? I don't know if you can actually make a real trade, you know. Like if the end of the world is coming, then like it doesn't even matter. You're gonna be dead anyways. So I wouldn't concern myself with that headline too much. The thing that I would be looking at right now is any kinds of tea leaves about the negotiations because they are negotiating right now, is my understanding. So, and I hope that we have some resolution to that by the end of the day. And we should realize, I mean, this is kind of like a known unknown that they could make a peace deal today. It's possible, right? We think it's ridiculous to start calling for nuclear weapons at this point. Oh, it really is. It really does not make any logical sense to be escalating like that at this point. If he's really seriously thinking about using nuclear weapons, then he truly has lost it. I think, everything up to this point, I think can be chalked up to somebody that is ideologically driven and bought into his own BS and made a huge miscalculation. But if he really starts going the nuclear route, then you really have to say this guy is just completely off his rocker, right? So, hmm. What's Nassim Taleb saying here? A reminder that Edward Snowden is a fraud. His job is to magnify correctable errors and imperfections in a transparent and Benyan system on behalf of an opaque autocracy. And you idiots were not seeing the obvious? Question mark. Whistleblowers can be part of the error correction process, except that in Snowden's case, he was an agent in the Kremlin's strategy, bring distrust of institutions in Western countries, structural, not tactical distrust. Yeah, well, wonder if he's kind of saying that was Snowden was inspired to do things the way that he did because of Russian disinformation and so forth. That's possible. Let's see here. Edwards noted, I'm not suspended from the ceiling above a barrel of acid by a rope that burns a little faster every time I tweet you concerning trolling ghouls. I've just lost any confidence I had that sharing my thinking on this particular topic continues to be useful because I called it wrong. Whoa, 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 whoa. Is he talking about Ukraine here? Okay, Russian Ukrainian discussions have concluded. Maybe Putin is acting crazy to make the threat more. Yeah, that's I think that's why I'm like I'm not too sure that you'd think too much about it. Okay, so some official is saying that the threat of nuclear weapons is extremely unlikely and that the population should not be worried. Oh, okay, so to that headline that you put out, live action, I'm from a minute ago, negotiation between Ukraine and Russia regained in Gomel, Belarus after a short pause. Al Rai Media Group reporter on Twitter. So they weren't done, they just were taking a break, right? That makes sense. I wouldn't expect to see a conclusion until the end of the day, and it might be multiple days, right? The problem with the Democrats has always been their weakness. It is difficult for them to make a war. The U.S. wars have always fallen into the hands of Republicans from Nixon to Bush. Well, but Democrats, I wouldn't necessarily say that modern Democrats Star Wars. This is I think if you believe in the military industrial complex conspiracy theory, then you would have to say that Democrats want to start a war and that this is the Democrats trying to start a war, right? But the Vietnam War was started by a Democrat, yeah. Although Democrat Nixon is a Democrat, or sorry, bleh, JFK is a very different Democrat from what Democrats are today, right? And in fact, a lot of what happened was the Democrats started that war, but then it was their side of the aisle that ended up hating the war the most. And so then when we came along to, for instance, Bill Clinton, well, uh, I guess the next case was actually the Iraq War, right? Um, sorry, Desert Storm, rather. Okay, well, did they start that? Uh, did the US start that? I'm sure that somebody in the military industrial complex conspiracy theory would try to make the case that they did, but Saddam just invaded a country. It was kind of but I digress. A Republican was in charge at the time, right? And then Bill Clinton, he did take isolated actions, but he didn't ever really started, It's like all of the wars have been, well, no, I take that back. So Obama started a war, right? He kind of started the war in Syria, but that one just kind of got downplayed. Like nobody, what was happening, but you don't hear people really talk about that one so much. I think in large part because we don't really have we're not actively involved in that war to the same degree. But it is a problem. I would say that you are picking up on something that's real, right? Which is like, but it's more of a tactical problem for America as a whole. Is that the American public is a big wild card in any kind of conflict. And of course, if the United States was attacked or threatened, then I'm sure that you would have the backing of the public. I think that in this particular case, you have very much have the backing of the public for the economic sanctions and whatever else comes. I mean, if the choice was sanction Russia or have a recession, I think that the vast majority of Americans would choose to sanction Russia, right? But when you're kind of doing this, getting involved in something overseas, like what happened in Iraq and Afghanistan, it's hard to maintain the public approval of it. That is to say, America has a very difficult time nation building in a place where maybe a majority of the populace doesn't really want them there. The way that we were able to nation build, say Japan, it seems like since the 70s, it's become difficult for the United States to do that. Something that we should realize, but the point there is that probably isn't pertinent in this case because I think that the American public is very staunchly behind this. And if this turned it into an extended conflict that went on for decades, I think that the American public would still support the Ukrainians. So, probably not a concern in this case. Okay, so we've been open for 2 minutes here. The initial move that we've had on this session has been up, but there is a possible bear swing coming through. And once again, not really seeing too many unusual movements anywhere else. Well, so why is the market going up? For the moment, I don't think that we have enough to say that like this is a bullish day straight up, right? Maybe in an hour we can say that though. And if it is on the way up, I think that the argument that you would have to make is that the worst is over. That should be the question that we ask today, huh? Maybe we should pull that. Um Worst is over or buckle up. And I'll just say volatility. Question mark. Ask your community. Here's a large bond trader talking TA. Well, I'm sure that plenty of people. Oh, that's not what I wanted to do. That's not what I wanted to do. Back. So there's a couple of things that I would, not without having watched it, right? First of all, you're going to see a lot of people, even people that are quite good and it's successful, um, talking about TA and utilizing TA, even if it really is the case that it provides no advantage. Um, and there's a lot of reasons why, but one of the biggest reasons I'm starting to find is that people just want to believe it, right? And if people believe it, then there's going to be people willing to provide the service, regardless of whether or not it's actually effective, right? And you can also have a lot of people that end up being really successful and finding their edge in other ways, um, and not realizing that that's where their edge is coming from and not from the technical analysis, right? But another thing that I would state is that technical analysis on an intraday basis is very different from technical analysis on a daily basis, right? So it seems so in for instance, um interest rates are rising, right? Is that reflected in the chart? Is that reflected in the chart? Well, it is now. Back in August, there was a lot of people kind of, well, and let's not even say August. I mean, there was that first drop, but then back in December, there was a lot of people that were saying, nah, it's not actually going to happen because look, the technicals are saying that they can't do that. And we're starting to move back up, right? But then when January came along, then we started saying, oh, yeah, actually, interest rates are really going to rise. So, um, what I'm trying to say is that again, in on a short term basis, the market is not very informationally efficient. But in the end, the information does eventually get priced in one way or another. It can take a really long time. It can take days, weeks, months, or even years in some instances for certain kinds of things. It could be years, right? So you can, especially if you're looking at multiple assets. So when you start to look at here's this asset and here's the 6J and here's ES, and what are they doing? With a basket of things, there are a lot of interesting things that you can discover from it. Okay. Um, and especially once you start combining here again, is like it can be really useful if You understand that the market is not informationally efficient and you're looking at the information too, right? Because even though the TA, even if you don't have a predictive signal, it's still useful to understand what happened or what is happening, even if it doesn't predict the future, right? Well, nobody ever said that TA is perfect, but here's what I'm saying, crypto pop. If you go and you look at any kind of intraday pattern that people claim exists, whether it's a head and shoulder, a price action setup, doji pattern, whatever, and you're looking at a 1 minute, 5 minute chart, if you backtest that over a sufficiently large data set, and I'm talking tens of thousands, hundreds of thousands of trades, you're going to find that it's break even in almost every instance. Is if you find one that's not random, keep it to yourself, start a fund. Keep it to yourself, start a fund because you found something very, very rare. Okay. But what you found, I'm gonna bet, is pretty complicated. It's not gonna be just some the right combination of Heikin-Ishi candles and moving averages or something like a lot of retail traders think that it will be. Okay. Those have all been, and any that may have existed have all essentially been eliminated from the markets already. There's considerable evidence to show that technical analysis setups, and this was actually on a daily basis, worked really well in the 70s. And then when the computers came along, they all disappeared. Right. But yeah, you can't take every head and shoulders around. You need to look at the bigger picture to take an actual trade. But at that point, if it's the actual situation that is the information that's not priced into the market, but that you can have, that actually matters, then how can you say that the technical analysis part of it is playing a role at all, right? You at that point you cannot scientifically prove that the TA works. If you can't sign, this is the thing that I find so fascinating about this argument. Let's say the people that believe in technical analysis, what is the advantage of technical analysis? Well, it's quantitative, right? You should be able to find the very specific setup and trade off of it. If you can't prove that it works, doesn't that undermine the whole reason for using it? You know? It really kind of, because the whole idea is that there can be patterns that, well, okay, so that's, it doesn't work that way. The patterns are just a self-fulfilling prophecy. It's all in the trader to make the right TA trades. They are not self-fulfilling prophecies. And I can explain why. So let's say that you have a, so we used to take a trade based off of a 10-minute moving average, right? I'll just bring the 10-year down here for a little second so that I can draw. Because I don't think that we're doing anything. Well, I mean, we're moving up, but I'm not so interested in participating in that for whatever reason. Okay, so let's say that we have prices going down and now it's going back up. Okay, so we have a moving average, and here at this point, it's going to be right. Okay, so actually, let me try and redraw that. And so we've been moving down, and now we're moving back up. And here is the moving average. Okay, and here at this point, we have crossed the moving average. Okay, so let's just say in some theoretical world that this moving average is a super moving average, and we have found that there is some percentage chance that it will continue to move up, which is to say that if we take a trade that it will go up 16 ticks this way before it goes 16 ticks this way, right? So let's say 16 ticks is down here and 16 ticks is up there. And we're going to say that there is some percentage chance um, P percentage chance is greater than 50%. Okay. Actually, let's go back and let's say 55% so that you don't have to worry about spreads and commissions and all that sort of stuff. Okay. So in this particular situation, we know that we have an edge because we've tested it over 100,000 trades, and over 100,000 trades, we know that we have a greater than 55% probability that we will reach 16 ticks in our favor before we reach 16 ticks against us. Okay. So we want to take that trade. Now, something happens. Other people find out about this trade. You go and you post your indicator online, and now there are other people taking it. Okay. Well, there is only a certain amount of liquidity between here and here. So if we know that it's going to go up to 16, in that space, there's only so much room for you to make money there. Now, how much money you can make from it varies based on the volatility of the market and the volatility of the volume, right? But there is a limit. There's a certain amount of money that can be made here, right? Let's just say, for the sake of argument, given the current market conditions and everything, let's just say that like 5K, there can be 5K orders to go after that. Okay. 5K. So what that means is if 6K people try and trade off of that pattern, the first 5K orders will make money, but the last 1K orders will lose money. And the later you are in that amount of volume, the less likely you are to make money from it, right? Right? So if I take it immediately right here, and I'm the first person to take it, then I'll do that. But then as it's moving up here, you know, I'm too late. I'm not going to make money from it, right? And in fact, if there's 6K, it's gonna hit back down on you, right? Okay. So what do you do about that? Well, you just got to be in the first 5K, right? But as soon as that price level is touched, what are you going to see happen? You're going to see a bunch of people go long at that particular point, right? As soon as the thing triggers, everybody's going to rush into it, and you've got to be really, really fast. And guess what? You're a retail trader, you're not going to be fast enough, right? So what are you going to do about that? What can you do about that? Well, I'll tell you what I would do. I see the moving average right there. I see us moving up into it. You know what I'm going to do? I'm going to buy it right here. I'm going to buy it right here now. I'm going to buy it before the price level is hit, right? So now everybody starts doing that. So now you get to a point where by the time we even get to the signal being triggered, 6K people are in it already, right? So now you're going to see. So now what's going to happen? Now it's going to come up. It's going to come to the thing, and it's going to bounce off of it, right? Or, people start trading it the other way. This is the other thing that can happen is if I know that 5K people are going to go into it, I can come in and I can say, well, I have like 20,000 contracts to play with. I'm going to absorb all of them and then push the market against them and stop them out, right? And then when they stop out, they're going to come there, and now I make that, right? So what eventually ends up happening? Well, the existence of the signal basically eliminates the signal from the market over time. As more people start to trade it, it disappears until short-term action basically becomes indistinguishable from a random walk. Do you see? So the self-fulfilling prophecy theory of technical analysis cannot possibly be true because of the way that the market works. The competitive nature of the market is such that any kind of short-term signal is going to get arbitraged out of the market. Here's the thing that I think that everybody that comes into the market gets wrong. This is something that an idea that everybody has when they first start trading that is wrong. That is let's not call it wrong. Let's say it's very naive. Let's say it's very naive. Markets are hard to move. The underlying assumption behind all of this is that markets are hard to move, isn't it? If we saw a move and price moved up 50 points or whatever the deal is, there must be a really good reason for it. I have oh no, wait, I didn't actually open it, did I? The one that you had from earlier I've got, but not Studio, that one. I can watch it later. The underlying assumption that everybody has when they come into this is that markets are difficult to move. And the reality is actually, of course, it's difficult to move for one order, but it is far easier to move the markets than you realize, than almost anyone predicts. And it is the case, there is a square root relationship between the volume and the price movement. So the way that the meta order, the square root law of meta order impact works is 1% of the volume can be responsible for 10% of the volatility, right? Once you realize that, when you really truly understand that, I really think that you sit down and you say, oh, this whole probabilistic idea of technical analysis is stupid. like like seriously, think about it. I have some signal again. I'm moving down and I'm moving back. In this particular case, we're talking about a moving average, right? And we're going to come across here. And at this particular point, we've back tested it and we found out that there's a 55% chance or greater than 55% chance that we're going to go up 16 ticks as opposed to down 16 ticks. Okay. Here's the thing. One person, all it takes is one person, and they don't even actually have to be that big. Like, that's the thing, is we think like, oh, well, maybe the biggest fish in the market. No, just like a medium-sized fish could single-handedly destroy your setup. Now, just one person could single-handedly destroy the setup. If there's nothing going on in the markets and we're just kind of, ranging before a big piece, before the market opens or something like that, all it takes is one medium-sized fish to come in and completely destroy your setup. So what does that mean? That means that you're not going to get 55%. It's going to be always going to be 50. It's always going to be actually 40 to 50%. Depending on the spread, essentially. That's what it means, guys. It's random. It's random. Because why? Because one person can do it, right? And this is where it gets so interesting, is that because it's so easy to move markets, it is extremely easy to eliminate statistical abnormalities from the market action. But it's also very difficult to accurately price in all available information, right? Because if somebody is coming into the market and they just need to rebalance their portfolio, it has nothing to do with what's going on in Ukraine and all of that other stuff, right? It's going to move the market, and it could move the market the complete opposite direction that it should be going based on the fundamentals, right? And it could move the complete opposite, or if it's really random, and I would argue that they are, if the large meta orders, some of these large meta orders are random, right? Those are going to bust through any of your technical setups. So the opportunity for you to get an intraday signal with a good enough probability for you to really make money in the long run the way that the market is set up and the way that the market reacts to large meta orders, you're just never going to get the probability that you need to really be successful. That's why almost all retail strategies that you hear about online involve some degree of manipulating risk. They tell you either to have a stop that's much larger than your target, or they tell you to all in with multiple contracts and take sequential profits, right? Those are two different ways of manipulating risk to put the probabilities in your favor. But in the long run, what they're doing is they're just making the fat-tailedness of your strategy stronger, right? You're more likely to have success in the short term, but the long-term expectancy of your system is still break even. That's what that means. That's why they end up using those strategies that they do. It's like literally the actual nature of the market. So if you want to have something that is actually a good probability, and I'm talking like, given equal risk reward, you're able to win more than 50% of the time or something like that. How do you do that? Or probably more likely for you to be able to find, because really being able to predict the short-term movements, it's so random, right? So really what we need to be looking for is something where it really does go more in our favor when we're right than it goes against us when we're wrong, right? How do you do that? Well, I think that you have to be able to predict the meta orders. Now, if you have a way of using information out there that isn't priced into the market and it does not show up in your technical analysis, although it may involve one part of it may involve analyzing a basket of assets and seeing their correlations and how they're moving together, right? And then you combine that with information in the market, you can predict large meta orders. Those meta orders are so impactful to the market that essentially if you're trying to trade anything other than those, you're not going to have success. Really, right? Like the impact that orders have on the markets basically means that all of this other stuff down here, this noise, you really can't make money from that stuff. That's really what they're saying. Markets are more statistically efficient than they are informationally efficient. So the statistical inefficiencies that end up just being noise. You can't really meaningfully make money from them. Not with one contract, you can't. Do you see what I mean? So going back to you're showing a very rudimentary understanding of how TA works. I was giving you like a very specific setup that I think people could understand. And I use that setup in particular because it makes it very easy for people to understand how once a signal exists, people will try and front run the signal, right? And people trying to front run the signal eliminates the signal from the market, right? But look, I have read so much stuff about technical analysis, okay? Like, okay, I have the big books, I have the Bible here, the Old Testament, technical analysis of stock trends. I don't have a print copy of it, but I've read Jim Dalton's books. Okay. I can tell you like every indicator that you can put on your chart in NinjaTrader, and then some, like all of the most popular community indicators that are available out there too. I can explain to you how they work. I can I can program them for you. Okay. Like uh, candlestick patterns. I've back tested, dozens of different candlestick patterns that you can use, and in all of these different kinds of situations that you can set up in there, right? We're doing all of this stuff where it's like, okay, if you have an inside bar and the trend is up and you're getting this thing and that thing. I mean, there's so many Different CCI was one that I have to say CCI was probably one of the most useful indicators that I did, and adaptive CCI. Always, I gotta tell you, if you are going to use technical analysis, you want to use Euler stuff because at least Euler stuff compensates for um, time lag, essentially. The Euler indicators, he's found ways to compensate for time lag or for other kinds of noise in the market that can create lag for you. Okay, so trust me, man. I sat here and literally did nothing for 4 years, but sit and backtest different technical analysis setups for people. And after backtesting literally thousands of different strategies, and I mean really it is thousands because we're using machine learning, so we're coming in and we're using like changing every variable in that formula to see if there's a certain set of values that works better and things like that, right? And what happens every single time if you get a large enough data set, it's essentially break even. It's essentially break even, and it does not provide you an edge on a risk adjusted basis. Maybe you read the wrong books, or maybe it just doesn't work. Like this is the thing, is like, okay, technical analysis tends not to work. We've tried a bunch of different setups. Does that prove that technical analysis cannot work? No, it does not. It does not prove it. It makes us think that probably it's unlikely to work, but it doesn't prove that it doesn't work. What would we need to have? We would need to have a piece of information that conclusively shows that technical analysis cannot possibly work, right? Otherwise, you can say there must be some magical combination of using them that allows them to work, right? Well, that's why I'm telling you what I am. Because what I'm telling you is the actual quantitative research about this subject that researchers have done over the past 30 years. And what do we come out with? Markets are extremely illiquid. They are very inelastic. Orders have a strong impact on markets, and that means that any kind of short-term pattern that you're going to see in the market isn't going to work. It's not going to work. That's literally what an inelastic market means, right? And an inelastic market means that the change in price does not affect the future supply and demand at all. That's what an inelastic market means, right? Uh-huh. But your name is Crypto Pop, so you're saying, oh, I struggled for a long time and then I started using technical analysis and I had success, and I'm like, oh, okay, so basically you've been trading the last 2 years and you've made money because you're in a crypto bear market. It doesn't prove that technical analysis works, right? No. Well, for a while we were in a crypto bear market, weren't we? From 2017 to 2020. So for 3 years there, we were in a crypto bear market. But now we're in a crypto bull market, right? As I'm saying, sounds to me like you've just been trading for the last 2 years and you've made money. And if probably it's the case that if you understood how to show your performance on a risk adjusted basis, you would be like, oh, it's not actually that good, is it? I am just assuming these things. You know why I am assuming those things? Because I've literally come in here and we've looked at this sort of stuff for hundreds of people, and it always comes out the same way. So let me ask you this. Do you know what your Sharpe ratio is? Or do you know how we could calculate your Sharpe ratio? So let's do this. For just your cryptocurrencies, what is your net profit over the last 2 years and what is the standard deviation of your net profit over the last 2 years? Which is to say, like, on a daily basis, you know, how does your profit loss vary essentially, right? I guess it's a hard thing to calculate, right? That's why I'm almost certain that you haven't done it unless you have a platform that does it for you, and the cryptocurrency platforms never do. Okay. The Sharpe ratio is the return of your portfolio minus the risk-free rate over the standard deviation of excess return. Well, we just call it omega, right? Omega. So this is where you need to know how much money are you making over the instrument and how much does it vary, right? And if it's less than 1, you're probably better off, well, let's not say less than 1. If it's not greater than 0.5, if it's not greater than 0.5, then you're better buying and holding, essentially. Um, if it's not better, now let me start over. Okay. If it's not better than 0.5, then you're going to make more money from buying and holding. If it's not better than 1, then you really aren't inconsistent enough with it to justify day trading it, essentially. Like, or to put it another way, if you were to go and start marketing the cryptocurrency hedge fund, if you don't have a Sharpe ratio over than 1, nobody's going to invest in it. They're just going to go buy Bitcoin. Because one means that you, for the amount of risk that you're taking on, you really have a meaningful and appreciable edge over the market. That's what over 1 means. Whereas 0.5 basically means that you're performing according to the market on a risk adjusted basis. Right? But what you're probably going to find with most people in cryptocurrency is the Sharpe ratio is going to be like 0.2. Or it could even be negative. I've seen that a lot too. Negative 0.5. And what does that mean? So you could have a negative Sharpe ratio and still have a decent amount of profits. What does that mean? That means that you're making money because you're taking on excessive risk. And in the long, that also means that in the long run, is going to come back and bite you at some point. Does a 3,000 tick move in 3 minutes count as a short? For sure. In the confines of when we're talking about technical analysis, to me, short term means intraday. Because the statistical properties of a market on an intraday basis is different from on a daily basis, from what I can see. You're playing with house money in crypto, so I can never lose. Yes, but that does not mean that other people are going to be able to duplicate your success using your methods, right? So you see, like, let's take this a different way, okay? Remember, I started this conversation out by saying, if I was going to prove that technical analysis doesn't work, how would I do that? I can't just come in and say that most people fail with it. I would have, because there could still be some magical formula of technical analysis that works that I just don't have. So that's why I go through and I show you this is the way that the market actually works. And because of that, we have reason to believe that technical analysis on an intraday basis doesn't actually have edge. Okay. Because prices are inelastic, technical analysis does not have edge. Okay. But let's take the opposite side of it. If we were going to prove that technical analysis works, what would we need to do? So, first of all, we could go and show positive results using technical analysis, wouldn't we? That would be the first stage. That wouldn't prove it, right? Because just because I could do it one time within one period doesn't mean that it really works. Really, in order for technical analysis to work, we would need to be able to have a method of doing things that if you use that method correctly, then you're likely to have success. That's really what it would have to mean, right? It would have to mean that, like, if we take a distribution of people that trade this particular strategy, right, we get some sort of Gaussian distribution, and that the majority of the people that use that strategy would make money from it, assuming that they are trading it correctly, right? That's really what we would have to show. But first, let's just show that one individual person has had success on doing it, right? And this is where I'm saying, but if you've made money, that's not enough, because there's some flaws in that. For instance, the asset that you're trading could have been up in that time. So if you have bought Bitcoin in the last 2 years, you have made money, even if you'd have absolutely zero edge. All you had to do was buy it, right? That's why in the Sharpe ratio, you need to look at the standard deviation of the portfolio's excess return. Excess return meaning what you made compared to what the index made. So I need to come in here on a daily basis if I'm day trading crypto, for instance, right? I have to come in and say I made X $1,000, the index or percent. I made 1% today. The market moved 5%. So my excess return was actually negative 4%, wasn't it? Right? I underperformed the index by the benchmark by 4% that day, right? But that's during the time period that I was in, right? That's why. So to deal with the issue, did my camera die? I'm sorry. I'm just gonna turn it off and change the source here. I forget how to hide it. I forget how to hide it. Oh, I can just turn it off like that. There we go. Okay, cool. Sorry, you can't see me anymore. I didn't charge my my camera yesterday, so I didn't have a very much battery. Okay, but anyways, I digress. So the way that you deal with the issue that you know, if your strategy tends to buy and the asset has been going up, you tend to make money. It doesn't necessarily mean that you have an edge. It just means that you were lucky with the instrument that was going in. That's why we look at risk adjusted returns, right? That also deals with the problem of you can come in and have a really, really wide stop, and so you're less likely to be stopped out. But you might make money, but you're also taking on a lot of risk, which means that in the future you have a certain probability of ruin that might be really high. And so you would have to come back and say, you know, how much risk are you taking on? And so this risk adjusted measurement solves both of those problems, right? So if we're trying to prove that technical analysis does work, the first thing is that you would need risk adjusted returns, which you don't have, right? So that's the first thing that you should step back and go, I might actually be wrong, because I thought that I had the performance metrics to show that I was successful with technical analysis. But now I actually realize that I don't, because I don't know what my risk adjusted return is. Right? You need to be able to combine technical analysis and be able to read price action plus market experience. Okay, so first of all, price action is just more technical analysis. Okay. Market experience. So really what you're saying with market experience though is this. When I have a price action setup, for instance, price action setup would be like this. If I do zigzag like this and I have a double bottom, right? This is a price action setup. I have a double bottom, essentially. Okay. And what are you saying? So first of all, we have to define the point at which we've determined that there is a double bottom. So there's an indicator in NinjaTrader called zigzag. You can come in and you can put a number in there. I think you can say like, oh, okay, if it's gone more than 4 ticks, then we can confirm that there's a zigzag there. So then what I would do is I would be like, here's a triangle. This is when it zigged, and this is when we knew that it zagged right here. Okay, there's the price action setup. Okay, so what you are saying is, not every time that this happens that it works out. That you have to have the experience to know when this works and when this doesn't work. Yeah, that's what you're saying. So really, what we're saying is out of all of these cases where it works, we only want this section right here. Okay. Or to put it another way, if we were to look at the distribution that you get after the signal, right? It should be like this, right? It's random. It won't be random. It will follow some sort of a power law, but you get some sort of thing around the mean where the amount of money that you make on the individual trade tends to be something like this, assuming that, we have a time limit. I know that a lot of you guys that use stop and target, and so really they're either here or here. But so another way that you could look at it is when you use the signal on a daily basis, what is your daily profit and loss? So we could look at it that way. Okay, what is your daily profit and loss? And you'd get some distribution like this, and then you say, well, we need to filter it so that we only catch these ones on the positive tail, right? But that's not what happens. What happens is if you come in and you apply a filter, okay, that is some additional conditions based on your experience about when it tends to work out and when it doesn't tend to work out. It doesn't just give you this little tail right here. What it does is it just gives you data points all over in here still, right? So what is the distribution of this subset going to be? Well, who knows? Who knows? You would prefer it to be like this. Something like this where, you tend to make a ton of money, right? But here's the problem. If you came in and you backtested that setup and you had 10,000 entries, right? And we showed that the distribution of that was random. So now you apply a filter to it. Guess what's going to happen? You might have 1,000. You might have 1,000 on that setup. So now can we prove that the setup works? No, we don't, because we don't have enough. We don't have enough to be greater than the error. It's not. You don't have enough. You need 10,000. So now you're going to have to go in and you're going to have to do like 10 times the time, right? And guess what? Your data provider's probably not going to give it to you. Probably not, because most of the data providers won't give you, well, especially if you want like to include order flow stuff on top of there. They don't provide that more than 1 or 2 years, right? You can get like daily bars, I think, as far back as 10 years, but that might not give you 10,000 data points. So you might still not have enough to do. And guess what I think you're going to find when you do have 10,000? Even after your filters, it's going to be random. That's what I've seen every time that we've ever done it. That's what I've seen every time that I've ever done it. So you know what I'm saying? Like the evidence that you're providing is not evidence. In fact, what it says at the moment is that you're probably being fooled by randomness. I don't just make this stuff up, guys. This is just I'm just telling you. Yeah, if you say so. You would have to provide us sufficient evidence to show that to show that. For the moment, you have not demonstrated that you even are able to understand the difference between random results or not. Because here's the thing: is if you knew the Sharpe ratio of your strategy just as soon as I brought it up, that's what you would have to know to be able to say whether it's random or not. Why is why has it been doing that? I'm gonna close that window and open it back up and see what it does, because it's been blinking on and off and it's really distracting. Oh, I don't want, not MES. No. Just my experience. That again. You don't have to post proof for something, but I'm not going to believe you. like here's the thing. Just think about it from my perspective here, okay? On one hand, I have decades worth of empirical research that says that this thing is not very effective. And what we know about the way that markets behave suggests that this method would not be effective. And then on the other hand, I have a random person on the internet that doesn't even understand the appropriate way to report results to even make a determination like that, that claims that it works. Who am I supposed to believe in that situation? You see the problem? Do you see the problem? Most people can't understand people can make money from markets is all like magic to people. No. A lot of people just get lucky. Like that's the funny thing about it, right? Is that if you come in and you start day trading and you make money from it, it is more likely that you made that money from luck than it is that you made it from skill. It really is the case. But not that good analysis, because you can even know if your trades are good based on your entries, even if they lose. If you place one trade that happens to be the bulk of the move, well, this is where again we want to look at our metrics, right? So risk adjusted return is a really important metric to look at. The Sharpe ratio isn't the only metric. This is another thing. Is that if you really understood what was necessary to make these kinds of determinations, you probably would have told me that a Sharpe ratio isn't a very good metric. Sharpe ratio is not a very good metric, especially not for trying to say like how good are our day trading returns. It's the most common and simplest to calculate. So we start there. And then if you have a good Sharpe ratio, then maybe it's worth going through and looking at some of these more complicated metrics to try and determine how well you're trading, right? I think one that's really, really great is Jigsaw. They have like a leaderboard. So if you set things up on your profile, it will put all of your trades on that leaderboard. And on that leaderboard, they have this metric that it will show you that is like your consistency level. That is a metric developed by a prop firm. That one's really good. And it's really hard to trade for a year and get a really good score on that. All of my wins in this market are just a random event. 10 point ES moves within seconds is not good. No, it is not. You really have to have a huge account to really justify trading ES in this action, right? Although the micros you could play it, right? You could play the micros and you could be getting like $20, $30 a pop, be happy with it. Although, will you actually pull an edge out of it? I don't know. I understand the point of these ratios. Just look at your P&L here, but no, it doesn't. No, that doesn't tell you anything. That's the details are just details. It's not. Yeah. See, I'm not trying to be rude to you, Crypto Pop. Like when I say these things to you, Crypto Pop, you should understand that every human on the planet that ever gets into trading is going to make this mistake. Every person on the planet that gets into trading is going to make this mistake. Look at just the end result, what their P&L is, and based on their P&L, determine whether or not they have an edge. And it's not an effective way of determining that you have an edge, because again, here, you could be trading cryptocurrency. So if you're trading Bitcoin over the last 2 years, the likelihood is that, and assuming that your strategy is not like a only short strategy or something like that, okay? But if you've been trading cryptocurrency for the last 2 years, the chances are you made money. Or let's not even say the last 2 years. If you traded cryptocurrencies in 2020 and 2021, chances are you made money from it. Does that mean that you have an edge? No, it just means that Bitcoin was moving up during that period. It just means that crypto was moving up during that period. That's why you have to look at the risk-adjusted return, right? Sorry. Sorry. And again, or let's do another example. Let's say that NASDAQ killer had come through and he'd made money. He's been showing me his profit and losses every day. And I'm pretty sure that it is positive over the last month, right? So him having made money over the past month, given that the S&P 500 has had big ups and big downs, so since the asset that he's trading doesn't have some sort of a directional bias during that time period, and he made money, does that mean that he has edge? Well, no, because part of the way that he's making the money is taking on a lot of risk. So risk is a way of making money without having an edge. But it only makes you money in the short term. What it does is it changes the kurtosis of your returns so that on a daily basis, most of the days, you make money here in the middle, but you're going to have a day that's so bad that it wipes out all of the other profits from everything else, is what you're doing when you do that sort of a thing. And I think NASDAQ killer understands that, because it's happened to him recently, even where he had one day that was just like, was so overwhelmingly bad that he lost like a week's worth of profits, right? So because of what you're doing is taking on risk. Now, I think that if you're going to day trade, to some extent, you want to be taking on risks to enhance your profits to some degree, right? But really, you should have edge underlying there to begin with, right? Verify that you have an edge and then add risk to it, right? And that's where really big profits can come from. But if we're trying to tell people that you should use a certain system, we need to have empirical evidence that that system works, and we don't. What we do know is that the vast 95% of people that try and use technical analysis don't make money. I use a stop loss, so I never lose more than, well, that's good. There's a lot of people scalping ES futures that have a bigger stop than their target. But that's just one way of doing it, by taking on excessive risk that you might not realize, right? So trading multiple contracts and averaging out of your trade is another way of doing the same thing, right? Because what will happen if you lose on all three, like let's say that I take 3 contracts, right? If I immediately lose, like it immediately goes against me, I'll lose on the 3 contracts, right? But if I win, in order for me to win more than what that loss was, it's gonna have to go a lot further than that, right? So you're manipulating the risk, but more on a time basis. But the end result is still that you're gonna get a fat tail eventually. If you've got a Grail on the NQ, he does some crazy things over there. Right. I actually trade CL most of the time. Okay. But like let's take this one step further, okay? Let's just say, for the sake of argument, that you had Sharpe ratio, that we knew what the profitability of your system was. And let's just say that what's more, that you had been teaching other people and you could show the results for your other people that they tended to be very positive, right? But here's the thing: is you're saying, well, I don't just trade this straight setup. I use my experience in all of these other things. So now we have to deal with now that we know that we have a system that has some edge, what is actually creating the edge? Because your system is so complicated. It could be the combination of all of those things. It could just be one individual element of that. So now we have to start breaking them out and looking at them individually. But like, here's the thing: is like, you've traded oil most of the time. You say, well, if you've made money in oil as of late, you probably was because you went long. I made money on oil. I made like $1,000 on oil. I was super happy about it. I wish that I had taken March options. Well, I don't know if I want to hold it into March, but it would have been expensive. But I could have done February instead of January options. Yes. I wish I had. Okay. Where did the edge come from? Well, the chances are that, I mean, it's kind of hard unless you're living under a rock. It's kind of hard unless you're living in a rock to not know that oil is going up, because there's not very much supply and there is geopolitical risks out there. A baby and a dog just entered my office. Yep, the baby opened it himself. Right. So anyways, how do you know that the edge is coming from the technical analysis and not what you know about current events? You know what I mean? Yeah, you've been trading it since 2015. So, and you've made money on it since or like aggregate since 2015? Asher, no, 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 no. Come on. Go with mom. If it's a pure technical setup, we should be able to backtest it, right? You know, one of the things that kind of comes interesting, right, is when I say pure technical, I shouldn't say pure technical. I should say if it's a pure quantitative setup. So I think that that's the difference for me between quantitative and technical, right? Is that technical analysis really is a description for a base of strategies that kind of have this underlying assumption that markets are informationally efficient, and that what I'm seeing on the tape is reflective of what's really going on in the market. Okay, which is false. But that's basically technical analysis. Now, you could be using a technical analysis strategy without that like base underlying assumption, but these group of strategies all came about from that kind of look, right? Versus a quantitative function, or rather, sorry, a quantitative strategy has more to do with like what is the source of the data that you're analyzing, right? So a quantitative strategy means that all of the information that you're using in your strategy is based on things that we can quantify, which means that it's backtestable. Okay. So if your setup is purely quantitative, then we should be able to backtest it. You might lack the ability to backtest it. You might think that there's something about the logic that you're using that a computer can't do, which is usually not the case, but if there's some subjective input, then that means you're looking at information outside of what is generated by the exchange, right? So now, how do we sort out that it's your technical analysis edge and not your understanding of the oil market, right? Like, I'm going to bet that you probably, if you've really been trading it for that long and you've been successful, you haven't told me if you've really been successful with your oil trades. It's awfully difficult to have been successful for that long. I mean, that's like what, 7 years to trade oil for 7 years and be successful in it. That's super hard. But if you've been doing it that long, I bet you know a heck of a lot more than I do about, for instance, the oil reports and the rig counts and all of those sorts of things, and how OPEC internal, you know, politics works and all of that. Well, I tell you what. So it's been about an hour since the S&P 500 is open. The treasuries did come back a good amount. Wouldn't be terrible idea to have taken a long down in here somewhere. But but then where does it become subjective? We would still need to see a risk adjusted return, of course. Because really it's just the easiest way of putting this through is like, if we say that you have had success, that doesn't mean that other people will be able to duplicate that success using the strategy, because we have only proven that you've had success. We haven't proven that the strategy actually has an edge. But, like, the thing that's so funny is that we've had to have like an hour, 45 minutes to discuss how we even analyze that sort of a thing. I think it's a lot easier to just come in and say, okay, look, this is the way that the market actually works. What we've found is that if you invest, you take $1 out of bonds and put it into the stock market, $1, that it actually increases the aggregate market cap of the stock market by $5, which means what? The impact that orders have on the overall market is really extreme. And we have some evidence to suggest that that is because of the way that a limit order book works, because we take these models that we have about how, modeling limit order books, and we get the same mathematical factors out of it that equal the results that we get from analyzing how inelastic markets are, right? If markets are inelastic, what does inelasticity mean? Market elasticity is a measure of how much demand changes based on a change in price. Well, supply and demand. How much supply and demand changes based on an increase in price. So if price increases, then less people will want the thing, but more incentive that producers have to produce some of it. And so that kind of becomes a rubber band that will keep price. It will make the price come back, right? It becomes harder and harder to keep moving price up because that rubber band wants to pull it back down. So if markets are inelastic, what does that mean? That means that when price goes up, does not change what the demand or supply of that asset is at all. So why would the current price of the thing have anything to do with where it's going to go in the future? It wouldn't. It wouldn't. In that situation, what is the thing that you would have to be able to predict to be able to know where it's going to go? You'd have to know what the supply and demand are going to be in the future, which means predicting future orders. That's why the orders are what matters and not what price. Problem with things that are easily backtestable is that you can't scale them up because other people will be competing with you on a perfect contract by price. Yeah. Well, chances are, if it really is a solid technical setup, you'll be able to scale it up enough that I think most retail traders will be happy with the profits that they're getting from it. But you're right. The more it being really technical essentially increases the competition for it. See, if we go for informational inefficiencies, there's so much informational inefficiency everywhere that there's just no way that we could ever hope to arbitrage it all away because it's just market inelasticity just creates so much informational inefficiency, right? So if you can find, well, it means that it's going to be a lot easier for you to find an informational inefficiency, but they're not going to be as consistent for you, right? They're going to be very situational. It's going to depend on the market. It's going to change a lot, and it's going to require a lot more work and a lot more education on your part to be able to consistently take advantage of those informational inefficiencies. But if you really truly do the work and you get to that point and you really have the resources to do it, I don't know if a retail trader does, but say you're trading for some bank or something like that and you've done all of that work, then that's when you can really truly become like that 1% of traders that just makes insane amounts of money, right? Whereas a purely quantitative edge, there's there's a limited amount of money that you're going to be able to make out of it, and you're going to have to be sneaky about it so that other people don't catch on to it, and there could be competition for it. For instance, market making, there is an edge in market making that can be defined by the math of, you know, markets moving, and there's a lot of competition for that edge. And unless you have a really fast connection, you're probably not going to be one of the people that win. The problem with information is you never know which one is important and when. Well, that's where I think that the edge would be, right? Is if you are able to know what pieces of information matter and when they matter better than other participants in the market, then that should result in an edge that you can find profits from. CQ says, I looked at trading oil. I don't think it's for me. It really is. It's like, okay, well, you made, yeah, that's how much you made in February is probably not a very good indication of how good you're at it, though. Come on. We already talked about that one. We already talked about that one. How much did you make on oil in March of 2020? That would be more interesting. Or, that whole quarter. That was just insane. I knew one guy that he made a ton of money that one day when oil went to zero after everything was kind of done, and then he took it, and then he took his profits the next day, and it was a couple tens of thousands. But I knew for that one guy that made money from it because he waited, he didn't get involved in it until long after like all of the craziness was done. For that one guy that I knew that made money, there was like 30 people that blew their accounts. Knew that day. You made 39,000 in 2020 trading CL. Well, I'd have to look at that. Do you think the Axie guys are making a killing? I think that they I don't know what their overall profit is. I do think that the Axie guys have some degree of edge, but I also think that the amount of risk that they're taking on would probably surprise you, and that when they lose money, it's not pretty. I remember I was talking to Pete one day, and he says that every time he goes and visits some or they have a barbecue, that they trade poorly that day. So every time he's ever gone over to talk with them, they're always sour. So they lose too. But since we don't really know what their overall profit is, I would have to think that given the size of their operation and everything and how long they've been doing it now, that there has to be some edge to it for them to have made money. But when you look at, where a lot of their money is coming from, my understanding is that their most successful trader is trading news kind of events. He does like market making most situations, but he is very much looking at the market and understanding it and taking advantage of it that way, you know? I don't understand what you're saying there, NASDAQ killer. Informational edges don't entail price moves because if informed trades seep into the market in bursts and noisily and inconsistently, that would require an investor stop. Well, I think that one of the problems that you have is that if you're going to trade something that's an informational edge, you're really going to have to trade it before you see confirmation in the market that that's really what's going on. Because basically the way that it works is as soon as it's well, listen, if you can provide me a daily P&L for the whole time period, then I can show you how to go in and do the analysis to see what um the risk adjusted return of it is, right? It wouldn't prove that technical analysis works, but it would be a step in the direction of proving that it could be successful. But I gotta warn you, whenever people have done that, I end up telling them things about their performance that they didn't know and are disappointing to them. How much time have we got left? 8:46. Dude, my son has gotten to the point where he can unlock doors. He can open doors now. My son can open doors now. So when he opened the door and the dog followed him in, that was so effing hilarious. I wish you guys could see it. No, the whole reason I want you to provide it to me is so that I can talk bad about TA. What do I typically trade? So my specialty is in the bonds. We watch the ES a lot. Okay, so one of the things that I think that I would that you'll see when you I didn't say that very eloquently. Let me start out over. One of the things that I'm going to hit a lot, one of the things that I teach a lot is that you really can't just look at one asset. If you try and look at just one single price time series, so that is to say, you come in and you have a 1 or a 5 minute, or maybe both, maybe a 1 and a 5 minute chart of the S&P 500, and that's all you're using to try and trade the market, you're extremely unlikely to have success with it. You usually want to have multiple assets up. So, for instance, these market makers, a lot of what they're doing is statistical arbitrage. So they are trading the correlation between two instruments, right? So you're not just going to want to watch the S&P 500. You're also going to want to watch the 10-year Treasury. You're also going to want to watch the dollar index. You're going to want to watch what the Dow and the Nasdaq are doing and the spreads between those. I would recommend watching oil right now for sure. Gold is pretty useful. I really like to look at corn and copper. I really like copper. I tell you what, copper is the most neglected asset out there. There is some uh, copper is a smart instrument. There's a lot that you can learn about the market from knowing what copper is doing that day, right? Can astrology or the migration patterns of birds be an edge to predict market direction? Oh, well, look, if you have it on Ninja Trader, then you don't even need to do that, bro. Yeah, you don't even if you should have just said that from the very beginning, right? We can just come in here. I haven't taken any trades today. You just come over here and you go new trade performance. And then you you'd have to come in here and do it over the whole time period. And maybe that instance of Ninja Trader doesn't have the whole time period. But you should be able to go in here and filter it to the asset that you're talking about there. Yeah, that doesn't matter. But I don't necessarily want to show off my name, but it doesn't matter. It's okay. This will tell you what your Sharpe ratio is, and it gives you a couple of other measurements that are a little bit more useful. And then I could come down in here and I could say, oh, okay, well, your average MAE is this and your average MFE is this. So that says that actually you're taking on way more risk than you realize, or it's actually very risk averse, or whatever it is. If you were able to show me the trade performance window for the whole time period, then we would be able to look at it, right? If you were trading a Chilean instrument, you would benefit from looking at copper. Here's the benefit of looking at copper. The thing that moves copper is global growth. So if you're coming over here and the S&P 500 is doing well today, but copper had a big down day, I would be trying to figure out why copper moved that way. Was it because there was some sort of, um, there was more copper produced this month than was anticipated, and so it moved that way? Or are they moving that way because they're concerned about global growth? Um, so in any one of these situations, it's not just like you look at all of the instruments and see what, and then do some numbers on it, but you need to look at every instrument and say, why is this moving? Why is this moving? What was going on in this market and going on in this market? Was the thing that happened represent a change in people's expectations about the future supply and demand of this instrument? Or was it and something that might be relevant to the other markets? Or was it just because of a specific headline that was specific to that one market? And then even more importantly, can I build up a narrative that money is moving from this market over into this market for this reason? Because if I can do that, then I can start to do some analysis like, this is how much money is going to have to move from that market and how long it's going to take, and I can base a trade off of that, right? I listened to a podcast that was discussing the inelastic market hypothesis, and they attributed it to the lack of liquidity in the current environment. Okay, so how do you send it to me? If you go into Discord, there's a link in the video description for Discord. And I do have to get going soon, but there's a link in the video description for Discord, and say something in the lobby, because I have to give you permissions to be able to post pictures first. You have to start talking, and then somebody will give you permissions. So just go into the lobby and say, "Hi, I'm CryptoPop," and I'll give you the permissions, and then you should be able to post a picture of it. And make sure that you're posting a picture of the full trade performance window, the full window, the full summary window, including like showing us. I mean, you might want to blur out your name if it shows up in there like it did on mine, but you would want to show what time period we were looking at and what instruments it's including, because you can filter in and out certain instruments and stuff. Prices as well said, I don't typically have the dollar pulled up. I typically have S&P, oil, NG, and NQ. Yeah. Well, I think that especially right now in this market, interest rates matter a lot, right? So that's one that I would look at. For the dollar, unfortunately, the dollar index is traded on the ICE exchange, and so we trading the CME don't have access to it. And it's like $100 a month or something like that for data for the dollar index. So what I've done is I've created an indicator that is part of the indicator package at speculatorsset.com. You get a free 2-week trial, and then to buy a license, it's $100 one time, and then that's it. So, and then that synthetically calculates what the dollar index is. It's one of the indicators that I have. Yeah, forward guidance podcast. I'll have to go and find that one. Although I would argue that it's not just the liquidity in the market. No, I don't use Telegram. We use Discord. Dude, when we started this, Telegram was not a thing. Like we started doing this in 2017. Anyways, yeah, on the market inelasticity. So first of all, you gotta understand there are properties about like this square root law of meta order impact is another way at coming back and saying, well, these price patterns probably aren't going to work, right? Like once we start to analyze the models around order books, what it kind of suggests is that you might be able to pull some edge out quantitatively out of analyzing the markets, but you're way more likely to find that edge by analyzing the orders than you are analyzing the price, because the market makers kind of have to adjust for the quite imbalanced flows that come in. Like there is a very high degree of autocorrelation in order flow. If you see a buy order, you are 0.5% more likely to see another buy order an hour from now. If you're just seeing like if you're just looking at one individual order, like they've done stats on that, right? Which means that there's a pretty meaningful amount of autocorrelation in which direction, whether the orders are buys or sells. And the market maker, in order to deal with that, has to adjust his prices to still make it largely diffusive and make the price random. So like they're introducing all of this noise in there, right? So why would you look at what the price is doing and not what the orders are, right? So that's the first thing. But the second thing is that Jean-Philippe Bouchot, he went and looked at some of his models, and particularly the square root law and stuff. And there are some terms in his formulas that he never really thought too much about. But once they did this inelastic markets hypothesis, he said, oh yeah, this is the same term over here. So that suggests, I don't think that it conclusively proves, but it suggests that the inelastic markets the inelastic nature of markets is in part due to the nature of an order book. But in that very study, what they were saying was that it has largely to do with the effect that these basically the ETFization of the markets is kind of what they were blaming it on. So they were saying that because almost all of the investment is done on the basis of ETFs, that those flows are so powerful. Those flows are so powerful that they just wipe out everything else. In other words, the number of people that are trying to trade off of the fundamentals is extremely small compared to the amount of volume that is just being traded randomly off of people investing into their 401k every month, which is kind of a problematic thing, right? There you go. Yeah. Reason why dollar increases markets by $5 for every dollar invested is because of a huge shift in passive versus active investing, and that passive investing carries no cash. Carries no cash. Well, okay, but I there's and those passive investing flows aren't going to have informational content behind them, right? But they end up being more important. Yes, because presumably if everybody in the market was trading off of the fundamentals and everybody in the market correctly interpreted the fundamentals all the time, then the fundamentals should be extremely predictive of what the market is going to do. But that's not what happens, is it? Right? But I think that it's kind of the same. It's the same thing on the price thing. Like this is just it's like one of like five different reasons I can think of why it's like trying to trade purely off of price is not very likely to do much for you, right? Number one, the biggest force in the market doesn't care about that. The biggest force in the market only cares that he has to buy so much today. That's it. And everything that they do is just based on optimizing their execution, and they don't care what their current price is. But there's also these other sides of like you know 1% of the volume can be responsible for 10% of the volatility. There's a square root law. Why is it that your price is going to hold? you know because orders have such a huge impact on price. Like that's the thing. Is if it was hard to move markets, and that's what everybody thinks is that it's very hard to move markets. If markets moved, there was a very good reason for it. That's not the case. But if markets were difficult to move, then if there was a price that was significant, it would be hard to get through it. You would be able to rely. You'd be able to rely on that. You'd be able to come in and say, this is where the demand comes in. And anytime that they get to that point, demand is going to come in and it's going to push them up. But when you realize how big of an impact new orders have on the markets, all of a sudden it's like, dude, trying to just pick a point at which they're going to hold at that point is kind of foolish. Or let me put it a different way. If you're looking for a trade where you're trying to minimize the adverse excursion against you, you want to maximize the favorable excursion and minimize the adverse excursion. The kind of edge that is truly going to reduce the adverse excursion against you is particularly difficult to find. You're more likely to find an edge in magnitude. That is to say that if it moves this way, it's going to go further than if it moves this way. Then you are, and so there at that point, the win rate that you're going to get should be mostly random. Should be equal to the risk reward ratio that you're looking for generally, but the risk reward ratio that you're going to get is going to be better, right? So, something that would normally give you 2-to-1 will end up giving you 3-to-1 or whatever the deal is, right? I digress. You agree with the logic? Yeah. I mean, what basically like the thing that is interesting about it is that we haven't proven that technical analysis doesn't work. I mean, we've proven that on a whole, retail traders tend not to be very effective with it. So that's the first argument that I would make to you is like, why try doing the same thing that everybody else does and fails with? But more so than that, what we've really proven is that markets are not efficient. The efficient market hypothesis is just dead wrong. It couldn't be more wrong. The way that the market truly behaves is the exact opposite of what most people want to think when they come in. It changes the whole approach. And now you kind of have to come in and say, "Oh, okay, well, me coming in and saying this price is going to hold and they're not going to do a stop through it." It's kind of silly to make that kind of a call. Like, you can set the trade up that way because you have to give yourself a stop and a target and limit your risk and everything. But if it goes through that price, you shouldn't sit down and say, "Oh, well, maybe the whole thing that I was thinking was wrong," because that might have just been a coincidence, right? You notice that I don't really, well, I mean, I will look for prices where I can see that the market makers care about that price is often what I do. Just because I want to be sure that at least the market maker thinks that that price is fair at at the moment, you know. But other than that, and that's why I like to trade these micros so I can give myself a big stop because I know that like there's a certain amount of noise and that they're probably I'm very unlikely to just pick a spot and they're going to hold it or anything like that. I need to give it enough room for the larger thing that I think is going to happen, the larger meta orders that I think are going to come through that day for them to come through. Okay, well, I've gone over way too much. I need to come in and change the title of the video here. I have a puppy. I have a puppy. And I will see you guys tomorrow. And hopefully by then we have those results and we can look at them. All right. In the meantime, stay profitable.